listening to Turning Hard Times into Good Times with your host, Jay Taylor. If you have a question or comment about today's show, Jay would love to hear from you at 1-866-472-5790. That's 1-866-472-5790. You can also send an email to questionsfortaylor@gmail.com. That's questions, the number 4, Taylor@gmail.com. Now, back to our program.
Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again John Kaiser. John's been with us before, so I don't want to take valuable time to read his impressive bio, but you can read it at the Voice America Business Channel. Go to Turning Hard Times into Good Times site at the Voice America Business Channel. Pull down John Kaiser's on the pull-down menu, and you can read all about him. But he does have an excellent service, and you can avail yourself to that service. There's some very interesting free stuff there, I might mention, but you get what you pay for. Well, I think you get more. You get more than you pay for when you go there for free, but Kaiser Research Online is the place to go to for some interesting free stuff. But if you really want to avail yourself to John's talents, there is a subscription service which you can avail yourself to by going to that site as well. Thanks for joining me again, John.
Jay, it's great to be back on the air with you.
Really good to have you with me now. You noted at the Vancouver conference, which I did not attend this time, but I understand you were there, that we've been stuck in a narrow range here in the resource sector. Just go over the reasons for that and what you think we might need to break out of this funk that we've been in for the last 2-3 years.
Well, there's sort of 3 core narratives by which that attract an audience to the resource sector, and all 3 of them are right now stalled. The one is the macroeconomic trends that talks about super cycle, where we see higher metal prices emerging as a result of a growing economy, generating demand for metals, which the industry is not equipped to supply, so we see higher prices. That pulls money into resource juniors. They put that into feasibility demonstration, and that's what the last decade was all about. Then there is the gold sector, to which the juniors are very much tied. When gold was running towards 1,400 earlier this year, it looked like we were turning out of that 3-year bear market that we had. But then when gold retreated back to the current level and the drumbeat about 1,100 gold as the next stop starting up again, the juniors have followed all suit. And there's no real argument to expect a higher real price for gold in the short term. So the juniors are sort of languishing, and the advanced projects, well, they're not getting better because of a higher gold price, and we are still dealing with rising costs because there is still inflation. The third way is to make big discoveries, and we haven't had any big discoveries for a while because the focus has been on advanced projects, and right now we don't have an awful lot of capital going into juniors to enable them to do the kind of exploration needed to deliver world-class deposits after a 30-year exploration boom. And so I'm looking at a couple companies that I introduced at the Vancouver show, saying, here are ones where majors are partners with very big picture conceptual targets in mind, and they're spending a lot more money than a junior can possibly raise, and they could deliver off-the-scale discoveries in the next 12 months, which restores the market's faith that, yes, juniors can still deliver world-class discoveries.
All right. Well, let's talk about a couple of those, John, and I might just tell our listeners that John's paid service has a lot of very good, I mean, all of these, I believe, John, correct me if I'm wrong, but the couple of companies we want to talk about today are companies that you cover on your in your service. Is that right?
Yes, they are. They are both open recommendations and stocks in which I own shares.
Okay, good. So the first one is Arupa Minerals, and I believe that's spelled AVRUPA Minerals. Trades in Toronto under the symbol AVU. 39 million shares only outstanding, 19 cents. So it's got a very small market cap, $7.5 million. I believe they're involved in Portugal and the former East Germany and Kosovo. Is that right?
That's right. They are a European prospect generator headed by Paul Kuhn.
Okay, so what's the big deal here with this company? I have a number of prospect generators on my own list, John. What's special about this one?
Well, going way back to Roman times, there is a belt of rocks that straddles Portugal and Spain called the Iberian Pyrite Belt, which has world-class volcanic massive sulfite deposits that host copper, zinc, gold, silver, and even tin. And in fact, the second largest deposit in the world, Nevis Corvo, was found in 1977. Now, there's a portion of this belt which is covered by younger rocks than the period where the deposits formed. And so it's much more difficult to find anything. And there's been a lot of work done in this 40-kilometer segment in the past 30 years, but nothing has been found. Paul Kuhn came up with a new concept as to how the stratigraphy works, and he was able to attract Antofagasta, the copper miner, as a partner, which can earn 80% by delivering a feasibility study. And they have spent the last 3 years, $4 million, testing Paul's theories, and not a lot of success, but a lot of sort of that data gathering that is required to flesh out your concept about how does this system work. Where should we really be looking hard? And in February, they pulled the first VMS intersection in 20 years in the entire Iberian Pyrite Belt, and they now believe they have the keys to stalking the elephants under this 100-meter cover of absolutely worthless rock.
So they have had some success in the sense of putting together a geological puzzle. Then you say they haven't had much success. I guess what you mean is they haven't had a lot of, let's say, commercial intersections of anything yet.
That's right. It is a geological puzzle because the stratigraphy is turned on its side. It has been chopped up through faulting, and there are certain horizons where those smoker systems formed. And the trick is to piece it all together, see how it works, whether it's upside down or right side up, find out the marker horizons, and then generate the targets where you have high hopes. And they are now shifting into the mode. They're going to get another 3,000-meter drill program to follow up the 6 holes around this target area. It's called the Alvalade project. And the optimism now is that they are homing in on the target. And Nevis Corvo, it's like a 300 million ton system of 7 deposits that were in some form or other connected. And they think they may have picked off the tentacle of an octopus of this nature. And Nevis Corvo is about 60 kilometers to the southeast in a part of the belt which is not burdened by these cover rocks that obscure everything. So if they find a Nevis Corvo type deposit, even though they have only a 20% interest, the stock could go into the double digits because it would have a piece of a world-class asset. And it has risen from sort of the 5-cent level it was at the start of the year to as high as, I think, 25 cents, and is now slumbering in the 15 to 20 cent range, waiting for confirmation that we have the discovery, and now it's just a matter of doing delineation drilling to map out the geometry of the discovery.
Yeah, and John, of course, with only $7.5 million market cap, I think that needs to be emphasized, because if they do find anything of that's attractive enough to keep Antofagasta in the game, it's going to be very, very meaningful relative to this company's market cap. So that's why you can get a huge run up and a double-digit gainer, very possibly, of course, with some success. So very interesting. Are they planning 3,000 meters this summer, John?
Oh, just to start in mid-June, and these are these types of programs which just follow after the other. Now
Sure.
When you do the $7.5 million market cap, you do need to multiply that by 5 to value the project on a 100% basis, because they
Sure.
net only 20% at the end of the day. But even if you do that, you come up with a $30 million valuation.
Yeah.
When we're talking about Nevis Corvo, we're talking about something that is worth a couple $billion, sort of
Right.
kind of like a Voisey's Bay when in 1995, which got taken out for $4 billion. So you're talking a 50-time price appreciation in the event of this best-case scenario. But what I like about this story is they are in an area where such deposits can exist, and they are exploring in an area where it has been very difficult to look for such deposits, and they've brought to bear a new, innovative way of thinking about the geology. So there's a chance that what was overlooked by past exploration will come into the sites, and then once we have that, then of course this stock goes crazy.
Yeah, well, it could very well happen for sure, and I might tell our listeners that, John, you've been successful in the past in the Diamond Patch, and I don't know for sure if you were in the Voisey Bay discovery or not.
We covered it very closely. In fact, Voisey's Bay helped launch my independent newsletter career.
Yeah, if I'm not wrong, you might have actually been working at the time with Bob Bishop.
Yes, I started with Bob Bishop for 6 months and then launched my own newsletter, which at the time was called the Bottom Fishing Report.
Right,
it was a
exactly.
good time to launch the Bottom Fishing Report because we had a pretty good bull cycle from 94 to 97.
Well, we're hoping that one of these major discoveries will launch the next one. Let's go to another name, Sodilo Resources Limited. It's a company, I think it's in the southern portion of the Congo Craton in northwestern Botswana. I mean, Botswana is sort of scary to me, but what do you like about this story?
Well, Botswana should not scare you. It is, in fact, the most stable country in Africa, and it derives most of its revenues, national revenues, from the diamond mines, the Orapa and the Shuaneng mine, operated by De Beers, and now Lucara has the Karo mine, where they are pulling 100 to 200 carat diamonds out of this deposit that De Beers let go. Now, Sodilo ended up in Botswana in the early part of the last decade, looking at a kimberlite field, and what they did was you use geophysics to find kimberlites under the Kalahari sands, and they found a bunch of kimberlites, but none of them had the diamond content to really justify advanced work. But while they were looking at the geophysics, they noticed an unusual degree of magnetic complexity, and they said, what is this? This is like supposed to be a worthless part of the edge of the craton, and there's nothing really here. And so they shifted focus and started exploring these magnetic targets, and as a result, they've discovered a giant banded iron formation system, probably several billion tons. They'll have the first resource estimate out in about a month, and the Botswana government is very keen because it has all these coal fields in northeastern Botswana, and it wants to diversify out of diamonds and start a steel-making industry. So it's very interested in this. But in the course of examining the geology as they were drilling these targets, they realized we have a dead analog for the Zambian copper belt, and in fact, this could be the unknown extension of this copper belt system. And the copper belt, as you know, has the richest copper-cobalt collection of copper-cobalt deposits in the world, and unfortunately, a good part of that is in the DRC, where you do not really want to be, and even Zambia, where First Quantum was, and still got shafted. Finding a copper belt 40 kilometers by 10 kilometer system, this would be extraordinary. And Sodilo owns 100% of this, but First Quantum is earning 70%.
So is First Quantum putting up are they putting up 100% of the expenditures to get to their 70%, or how does that work?
Yes, it is in effect a carried interest to a production decision. They finished the deal in August of last year, and since then they have spent $8 million just collecting geological data, drilling fences of holes, lines of these holes, just to collect stratigraphy information, like how does the geology in this basin behave. They're not even interested in hitting the deposit. Now they finished 200 a grid of widely spaced shallow holes, which are simply mapping the bedrock underneath the Kalahari sands and what kind of geology is their alteration. And they're finishing a giant regional gravity survey, which they'll combine with their electromagnetic survey. And by the end of July, they'll be looking at all this and say, now, where there be monsters. And hopefully we see big targets come in, and then the sort of the spearfishing exercise that investors and juniors like, that begins in August as they start drilling targets that could deliver, these 30 million ton, 3% type deposits. And the instant they hit one of these, confirming that this isn't just a similar geological setting, but one where a similar grade and scale of copper deposit evolved, well then, Sodilo, with only 40 million shares outstanding, this could become a double-digit winner.
Yeah, it's
Quantum, it would be big too, because they would, in essence, control in a stable country with a reasonable government an entire copper belt.
Yeah, very interesting, John. And I might just mention to our listeners that the stock might appear to be a bit more expensive than Arupa, but actually there are only 30.9 million shares out, $1.35 today. I noticed it was up 10 cents earlier today. That gives it a market cap around 42 million. So if you do the exercise that you talked about with Arupa, we're looking at, you have to multiply that market cap by about 5 times. They're comparable on both of these, then very small cap, mini cap companies with extraordinary potential. We underscore the word potential because in this business, Lord knows there's never a sure thing, that's for sure. But John, these are two very, very interesting ideas, and I see that we're out of time already, but I do want to get you back again sometime in the near future to talk about another company we talked about recently when you were on, EMC Metals Corp, and there's another one as well that's doing some interesting exploration work using new technologies in Nevada Exploration Inc. we want to talk to you about too as well. So thank you very much, John, for coming on with us. And, just to let our listeners know again, go to Kaiser Research online if you want to know more about what John's talking about now before he comes on the next time. Go there and sign up for his service, and I think you might be very pleasantly surprised. Never know in this business, but thanks again, John, for being with us and giving us some very interesting ideas.
Thank you, Jane. I look forward to our next session together.
Likewise, I look forward to it. Well, folks, don't go away because coming up next will be two former congressmen, two former advisors to Congressman Ron Paul. We're going to be talking to Jeff Deist, and he was his chief of staff, and Daniel McAdams, who is his foreign policy advisor. So don't go away. We'll be right back with Jeff Deist and Daniel McAdams.
We're always talking business. Talk to an expert. Call now, toll free, 866-472-5790. That's 866-472-5790. Voice America Business Network.
Caden Resources is an advanced gold mining exploration company with 2 exceptional gold projects in Mexico. The company's flagship El Barqueño project represents the most valuable opportunity that an exploration company can have, which is the continuous discovery of high-grade gold from surface in arguably the best mining jurisdiction in Mexico. The company's second project, Morelos Sur, has one of the most talked about land positions in the heart of Mexico's largest producing gold belt.
When it comes to business, you'll find the experts here. Voice America Business Network.